Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, May the 22nd, 2018, and this is the Daily Report for gold and silver. Gold continues to trade in a tight and narrowly defined range, closing off by about 40 cents today at $12.90.50. A quiet and methodical climb to higher pricing has been evident in silver, gaining about 3 cents on the day, closing at $16.55. And both metals have a little bit of a tailwind with a weaker U.S. dollar, fractionally weaker, down 8 points at 93.49. The Dow holds above 25,000 for only one day. Today sinking below that at 24,834, a net loss of 178 points. And Bitcoin futures continue to fall, losing about $300 or 3.6%, closing at 80.80 and 87.70 in the CBOE and CME futures exchanges. Now for the fifth day in a row, gold continues to trade in a narrow and defined trading range and has had consecutive closes above what we deem to be a critical level of support at $12.88, and that of course is based upon the 0.618% retracement from the lows achieved in December of last year up until this year's high at $13.69. This narrow and defined range has been evident since the market sold off exactly a week ago on Tuesday, losing roughly $28, but more importantly, breaching the former critical support level at $1,300 per ounce, which also corresponded to the 200-day moving average. While we have seen gold trade to a series of lower lows, breaching this support level, it has managed to open and close above that price point for the last 5 trading days. From the recent activity in gold, we can certainly say that gold is attempting to form a base and find some sort of support at these current lows at approximately $12.88. However, what has been lacking is the market using this price point as a jump-off point to either move to higher pricing or to continue its fall and move to the next level, which I believe would be $12.66. Although recent price activity has not given us any kind of adequate information to determine whether this market will hold at this level and begin to trade higher or break to the next support level, there are a couple of interesting observations that we can make. The first one involves the basic retracement, the fib retracement that we have been using, and that is the fractal quality that is contained within. As you can see, I have just moved the start point for our data set, which was formerly set at this low, achieved in December of last year at approximately 1240, and moved our starting point to our data set down to July's of 2017's low, which begins at about 1204. When we do that, what is interesting is the former level, the 0.618% retracement, is now the 50% retracement. At the same time, we can see that this former low that we began our retracement from has now become the 78% retracement. And it tells us that gold is trading within a defined pattern. For the second observation, we really need to look at a weekly chart that I've just pulled up. And on this weekly chart, our starting point is going to be the conclusion of the multi-year correction, which absolutely occurred at the end of 2015, beginning of 2016, when gold traded to a low of 1,040. From that price point, we had a substantial rally, taking gold to the highest point it has traded to since that correction, which was approximately 1375. And then we can see a series of lows that came into the market. The first occurrence is December of 2017. Then again, we get our second low, a higher low, which occurs roughly in July of 2017. Third occurrence, our third higher low, occurs at the beginning of 2018, end of 2017. And if this price point now holds, we would have our fourth instance of a higher low. At the same time, on each subsequent rally, gold pricing has been unable to take out what I have labeled to be the brass ring, which sits at 1375. We can see that there have been multiple attempts, but on each of these attempts, it has ended in failure, with the market stopping short of taking out these highs. Therefore, we have had an ascending bottom and a flat top in terms of a technical definition. While it is quite obvious that on a very long-term basis, we can absolutely see that gold has been able to take out these tops up at around 1370, it is undisputable that we have seen this market move off of those lows, ending the multi-year correction here, and we have seen the market move to higher pricing. Therefore, at some point, we will need to see a breach of 1370, 1375, which would be the final technical confirmation that gold not only ended a bearish cycle at the end of 2015, but also began a bullish cycle. Interestingly, while gold has been forming a base and trading in that extremely narrow and defined range, and over the last 5 trading days has really gained little ground, silver has been quietly and methodically moving to higher pricing, actually closing above the 50-day moving average today at 1657.5, which is a net gain of a little bit over 3.5 cents. We can definitely see that the market actually opened at the 50-day moving average and closed above it. We also had this extreme and exaggerated high that came in, finding some resistance at approximately 1670. After trading just above the 50-day moving average yesterday, Bitcoin has returned to a bearish mode, opening below the 50-day moving average and closing just at the 50% retracement. Our assessment maintains a bearish sentiment for the cryptocurrency, and our target remains at $7,700 per ounce. I believe that we still have a ways lower to go. Traders, what is evident over the last 5 trading days since gold has fallen $28, breaking below $1,300, is that it is attempting to form some sort of base and level of support just above 1288 that we have earmarked as a critical level, the 0.618% retracement. However, we haven't seen any bounce to the upside nor break to the downside, and that is what we are waiting for to get some indication of the next major move in gold. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.